Welcome everybody to this meeting of the Finance and Council Controlled Organisations Committee. Good to see we have a number of additional experts here to help us through what is a fairly weighty agenda. I'm very pleased to welcome in particular Mr. Warren Allen, who has chaired our Audit and Risk Committee. So thank you for making time to come here, Warren. I know that you've been on a tight schedule. Also very pleased to see that Chair of DCHL, Keith Cooper, and Gemma Adams are able to be here to answer questions regarding the fairly weighty SOIs agenda that we have. So thank you all for coming. I believe that we have some apologies to begin with. We have an apology from Councillor Brent Weatherall, who won't, I believe, be attending at all. We have a lateness apology from Councillor Houlihan, and a late or possibly total for the meeting apology from Councillor Kevin Gilbert. And Councillor Walker, you had... Oh, you're going to second the apologies. Oh, you're well ahead of me. Thank you very much. Right, well, I move from the Chair that we accept those apologies, seconded by Councillor Walker. All those in favour? Aye. Against? Thank you. Good. Those are noted. There is no public forum today. Thank goodness, because we've got really quite a weighty agenda here. The declarations of interest, I'm obliged to remind members the need to stand aside from decision making when a conflict arises between their role as an elected representative or in any private or other external interest that they might have. Are there any changes or updates to the interest register? None. Okay, in that case I move from the Chair that we accept the declarations of interest as written. Have I got a seconder? Thank you, Councillor Ackland. So moved and seconded. All those in favour? Against? No, thank you. And so that's confirmed. Right. Getting into it now, the Finance and Controlled Organisation Committee meeting. I want to confirm the minutes of our meeting that was held on the 14th of February 2023 as a correct record. You've all had a copy of the minutes. Councillor Walker's happy to second. Any discussion? Nothing that concerned anyone of the minutes. That's good to hear. So all those in favour of moving the correctness of those minutes? Against? No? All right. Carried then. Moving on now to Part A reports. Finance and Council Controlled Organisations, the Forward Work Programme, and if I could ask Chief Executive Graham or Mr Logie, or perhaps both, whoever would like to speak to the Forward Work Programme.
We're happy to take questions through the Chair. Deputy
Mayor Barker, first off the rank with a question.
Thank you, Councillor Vandervis. I have a question on page 21 there in the area of work. It says submissions to central government and other external parties, and then there's a progress to date. 11 submissions have been considered to date. 4 new submissions are on the agenda for approval, and I wonder if that's there in error, because on the 28th of February we had 15 submissions that we had done in council.
Yep, no, that is an error, and I'll have the team fix that.
Councillor Walker.
Thank you, Mr Chair. Probably as good a point as any to ask a question around the Waipori Fund, because it's on here. Just and maybe it's a question for Mr Davey. Just a question around whether or not we have an exposure to Silicon Valley Bank Signature or the bigger beast, Credit Suisse.
So I'm happy to follow that up with Mr Davey.
So you'll follow that up with Mr Davey, and I will assume you'll get back to Councillor Walker, or perhaps copy us all in?
We'll copy all councillors on the response.
That'll be great. Okay, so that's Councillor Walker's question dealt with. Do we have any other questions? Right, any other comments regarding the Forward Work Programme? Anyone want to use this opportunity to say anything about how things are progressing? Councillor Walker is happy to second. I move from the chair that we accept, that we note the Financial Council Controlled Organisations Forward Work Programme, seconded by Councillor Walker. All those in favour? Against? None? Okay, I declare the motion carried. On to the Audit and Risk Subcommittee overview, page 23 of your agenda. And welcoming Mr. Warren Allen to the chair, and thank you very much. You've had a busy morning with some of us already, and glad to see you here still smiling today.
Thank you very much, Chair. Thank you for that welcome. I'm feeling somewhat nervous being referred to as an expert. I'm not sure that I live up to the definition of an expert, but what I do understand is the sort of the lingo of audit and risk matters, and sometimes we're accused of talking in tongues. So what I thought I'd do today in the presentation, and apologies to returning councillors because you've seen some of this, but it is worth repeating. So, I will explain sort of why we have an audit and risk subcommittee and what we do. I couldn't help myself. I think this one and the next one are spectacular photos of your wonderful city. I don't have the pleasure of living here, but as a family we certainly had the pleasure of you educating two of our daughters. So we've spent a lot of time here, and I think that that's an amazing photo on the website, as is... is there a trick to this? Can I do it off here?
Yep.
And that one, of course. So this, as the chair said, is an audit and risk subcommittee overview, and I have the pleasure of serving you as an independent chair, and I'll explain that in just a minute. So first of all is, why do we have a audit and risk committee? And like most things in local government, we reach for the Act or the regulations. And there's two relevant requirements in the Act, and they're responsibilities of the council and in fact on all councils in New Zealand. And one of them is to maintain a set of processes and controls and systems that produce, if you like, information that you as councillors can make appropriate decisions on. And the second one is part of the regulations, is that you're required on an annual basis to prepare an annual report and financial statements as part of your accountability to the stakeholders. And the stakeholders in this case is anybody that decides to read your annual report. And really the second bullet point that I make there is that the Audit and Risk Subcommittee is a great way of helping you to discharge those two responsibilities that sit within the legislation. And the Audit and Risk Subcommittee has the time, if you like, to drill into some of these matters a little bit more than you would wish to here at the council table. I'm joined by another independent member on the Audit and Risk Committee. So with myself, with the accounting and audit experience, the other member who we'll talk about in a minute has legal experience. So, we bring that legal and that accounting experience to the discussions, which, as I say, we can spend a little bit more time on. So, in summary, it's an ideal structure to utilise good governance processes and skills to gain assurance that the risks have been identified, managed, and where possible mitigated. It's a strong demonstration of council properly discharging its responsibilities that set up under the Act. What's interesting to note is that there's no direct legislative requirement for an audit and risk subcommittee, and that's very different than if you look in the private sector. In the private sector, and if you look at companies that are listed on the stock exchange, they have a legislative or a regulatory requirement to have an audit and risk subcommittee of their boards. Excuse me, but in the local government, there's no such requirement. And it's interesting to note that that's different than what our cousins across the ditch in Australia, where there is a regulatory requirement for local government to have an audit and risk committee. But it's accepted in New Zealand that it is good practice, that it's something that should be done, and it's certainly something that the Office of the Auditor General has really strongly pushed over the last 16 years. They started to push it in 2006, and they've had really good success, because I'm not aware of any councils now that don't have a audit and risk subcommittee, and the majority of them also have independent members. So what are the key operating principles? Well, first of all, that they're independent from council and management. So not in terms of structure, because the structure it's a subcommittee of council, but you know, as a subcommittee, it operates with independence. So if there's a particular area that the subcommittee feels that we need to spend a bit of time in and take a deep dive in, then we will do that. But you know, as you'll see as I develop this presentation, we also welcome guidance and direction from council. But you know, if there is an area, and over the last couple of years, we've spent extra time in insurance, a very sort of vexed area in the current market, and also cyber security. So, you know, they weren't necessarily directions from council, but they were areas in which the members of the Audit and Risk Subcommittee felt that we needed to spend some extra time. So we bring a different and independent perspective, certainly with the two independent members. You know, we're not elected members, but I can tell you that my experience is that the elected members there also subscribe to that independent perspective on risks, challenges that the council face. And as I've said, you know, we can spend a bit more time than what council will necessarily want to. Covered off, the purpose is to assist council in discharging its responsibility. As is always the case, there are elected members and the two independent members. And that really meets sort of current best practice. Certainly the Auditor General over the last 2 or 3 years has been working very hard to encourage councils across the country to have independent chairs. You know, that has been the case for some years here in Dunedin. Now, a very key principle is that there's an open and effective relationship with the external and the internal auditors. And the council has a officer that's responsible for internal audits, but most of that work is subcontracted out to a Dunedin-based firm who I can say here does a splendid job for you. You're well served by the entity that does most of that internal audit work. And we at the Audit and Risk Committee receive those reports, discuss them and consider them. And at times we have the independent contractor come in and speak to us. The final bullet on this slide is a really important one. We are not a decision-making body per se. More in the terms of advisory or supporting structure to assist council to meet both legislative and community expectations. And you know, this is really important to understand, that sort of council cannot delegate its responsibilities. It can ask the Audit and Risk Subcommittee to do additional work in areas where it feels that should be done. So what are our key areas of attention? And these are not necessarily in any order of importance, they're just how they tumbled out of my mind. So financial reporting. And as the Chair has alluded, we've had a out-of-sequence meeting on the draft financial report. It's been a very challenging year for local government entities throughout New Zealand in finalising their annual report and financial statements for the June 22 year. You know, it's unheard of that at 9 months into the new financial year, we're still trying to finalise it. But there have been one or two very compelling and very difficult challenges, but we're very close to that. And certainly from this morning's meeting, we're hopeful to have the June 22 annual report financial statements finalised, signed off by the auditors and in front of Council within the next 2 or 3 weeks for your approval. So, you know, that's an area that we spend time in. It's an area certainly of expertise. I shouldn't use that word saying that I'm nervous about, but it's certainly an area that I've had a lot of experience in over my career. You know, this is I can provide a level of comfort when you come to make the decision on signing off on that annual report. Risk management and systems of internal control. As I said, that's one of the legislative requirements, that councillors are responsible for ensuring that there's a proper system of internal control. And internal control is a little bit sort of like the foreign speak that I referred to, but you know, it's systems that provide reliable information. So you know, it's systems of a whole lot of things that you know, come together in a council organisation that provide you, the councillors, the information that you need. Interesting to note that in the current New Zealand context, we spend a lot of time on health and safety, a really big area of exposure and risk to councils. We do deep dives, as I mentioned, into key areas. We work closely and understand the external audit process. We have the external auditors who are Audit New Zealand on behalf of the Auditor General in our meeting this morning. Internal audit also is a regular item on our agenda. Absolutely important that we have effective communication to full council and to management. We review and comment on council policies, and this is where having an independent member with a legal background is really sort of very helpful. You know, you're well blessed with a chief executive that has a legal background, but in these sorts of things with policies, 2 eyes or 2 sets of eyes are always better than one. Maintaining and considering our own effectiveness. Because it's not legislatively required, if we're not effective, if we're not doing our job, then we should pack up and go away. So every now and then we look at our effectiveness, we ask council, are we doing the job that you want us to? All right, so let's have a look at Dunedin City Council. Those principles and objectives were sort of what you would call best practice. How do we operate to those norms? Well, we meet at least 5 times each year, and occasionally we have out-of-sequence meetings like I referred to we did this morning. It comprises the Mayor, the Deputy Mayor and 3 other elected members, and 2 non-elected members, as I said, myself and Janet Copeland, who is a Otago Southland resident and a very well-known New Zealand employment lawyer. Janet has served on the Audit and Risk Subcommittee longer than I have, and certainly I for one, and I know the management team really appreciate Janet's involvement in this work. For several years now, DCC has had the independent chair, so you know, that's another tick against best practice. And this is sort of a fairly standard agenda item that, or a set of agenda items that we run at each meeting. Risk management, the risk register update, legal matters. We have an update on what legal matters are being faced by council, and we discuss and have opinions on that. External audit plans and completion reporting, internal audit work. We receive regular updates from DCHL, and I thank Emma, is it? For sending those through to us. So, we do have visibility. I have contact with Tim Lone, who's the Audit and Risk Committee Chair for DCHL. So, there is that connection and interaction there. Treasury risk management and compliance reports, another really important part, and reviewing the protected disclosure register. The specific agenda items that we occasionally look at, I mentioned deep dives. We're in the process of planning our deep dives for this year, and you're probably not surprised that we are looking at sort of Three Waters reform and what form that will take, and how that will impact Dunedin City Council. The annual reporting, financial statements, performance reports and accounting policy. The long-term plans, which are done every 3 years, and later this year the planning will start for the next one. It seems just a few days ago that we completed the last one. But 2024 is the year for the next long-term plan, and so that will feature on our agenda from the middle part of this year through until it's finalised in June 2024. We keep an eye on the audit findings that come through from both external and internal audit, and we have a register, and we hold management to account that they are addressing those findings and dealing with the points raised. Can I say that we have a very effective working relationship with the management and the external and internal auditors? It's not always a bed of roses. Sometimes we have a different view, not from management normally, but certainly the external auditors have a difficult job, and sometimes we have a different view. But the relationship is professional, works well. We challenge where challenge is required, and they do likewise. I find that management are very responsive to any suggestions or recommendations that we as a committee, or Janet and I as independent members make, and certainly suggestions of what could go on to the agenda. So, in my overall opinion, the elected councillors on this committee have been active participants in the committee work and diligently undertake their roles as members. And, I'm always pleasantly surprised with the standard of questions, and sometimes we have sort of fairly lengthy papers. This morning we had 207 pages for the draft annual report. And it was obvious this morning that the elected members had been through that, and certainly if we go back into the previous triennium, the elected members on there at that stage were very active participants, and I can tell you that's not always the case, but it is here. My final point is that I request that Council continue to make full use of the interest, expertise and processes that are available with the Audit and Risk Subcommittee. If you think there is something that you want somebody to look at in a little bit more detail, you only need to let us know, either through the Chief Executive or the Chief Financial Officer, and we can work that into our agenda and sort of report back to you. We are there as part of your team. So there's nothing more that warms my heart that we see you asking us to do something on your behalf. And whilst I underline again the independence, but we're there as a subcommittee, and I do welcome and encourage you to sort of use us. So that's it, another wonderful piece of art on the agenda. Chair, I'm really happy to answer any questions or discussion that the committee may have.
Thank you very much for your update, Mr. Allen. It's always refreshing to hear, and it's also good to see that you've stimulated some questions amongst us, starting with Councillor Gary.
Kia ora. Thank you, Mr. Allen. I wondered if you could expand on the delays regarding the audit and the external nature thereof.
Through you, Chair. Thank you, Councillor Gary. I did allude very briefly that this has been a really challenging year. And thank you for the question, because it's important that council sort of understand that, 9 months after balance date is not the norm. Normally the council will be signing off on its annual report within 3 or 4 months of balance date. This year has been impacted by 2 or 3 quite significant events, and they're not just Dunedin-based events. All councils throughout New Zealand have been facing this. And if we look back in the past, councils have used different approaches for valuing their three waters infrastructure. So the pipes in the ground, if I can use that term. And each council had a slightly different approach to doing it. And Dunedin City Council had an approach that it had used for several years. It was an approach that was used by some other councils. But, the valuation industry and certainly the local government sector felt that there was a better approach, or a more appropriate approach, to valuing three water assets. So Dunedin City Council at the end of the 2021 year decided that in this 22 year we would change the way that the valuation of the three water assets. And, coincidentally, it was important that that was sort of brought up to best practice as we go into that three waters reform. So a group of independent valuers were asked to value the assets. It's been through a really thorough process, including a peer review by an engineering firm. And a new valuation, which is, and there's big numbers involved here, it's about 600 million increase in the valuation. So, and because valuations, the term was used at this morning's meeting, it's an art, not a science. It is very subjective. It's subject to a lot of judgment. So, it's been a really, really difficult exercise to get to a point where everybody was happy. So that's delayed the process this year, and many councils throughout the country are going through the same process and are having the same challenges. Another key reason was there is a great shortage of auditors in the New Zealand market, and in fact internationally. And Audit New Zealand, the audit service provider, was quite severely impacted by that shortage. So, they didn't have the people that could complete the work in the normal 3 or 4 month time frame. They've had to do some additional work, particularly around the valuation, but also around some of the drinking water and the building consent regulations. So, all in all, that sort of led to a very difficult and challenging time. But I can put on record that DCC management and finance team have done a wonderful job, and we are so close now to sort of finalising it, putting a bow around 22 and then immediately moving on to 2023.
Thank you.
Any further questions? Councillor Walker.
Thank you, Mr. Chair, and Mr. Allen, thank you for that excellent overview. My question is just a brief one around deep dives, and I think you alluded to the fact you'd done cybersecurity and insurance, and I guess they speak for themselves. But you said moving forward there would be a deep dive around Three Waters. Can you just expand a wee bit?
I think our current view is that it's such a major reform, and we may well sort of add in the RMA as well. They are two really big pieces of reform coming down from central government that will have significant impact on council and the way that it operates. And I suppose our concern is just what is that impact going to be, and what changes perhaps need to be or have been made in the systems and processes of council. So that there is not, we're just another sort of layer there, if you like, and sort of checking that these reforms don't cause an exposure to council with something sort of not being done.
Chief Executive Graham, you've got something to add?
Just to add on to what Mr. Allen has said, we work closely with the committee and the internal auditors to look at where, as a management team, we think there might be real value in a deep dive. And so we identified, for the reasons that Mr. Allen said, that with reform and the potential changes that we'll have to the organisation, it's really important to actually have someone independently look at if our planning's right and what we are proposing is robust and there aren't gaps.
Yeah. Whoops, a follow-up question just in terms of your answer there. In terms of the previous deep dive around cybersecurity, did anything emanate from that has been instituted as now council policy or not?
We have to be a little bit careful how I answer this because that was a non-public item, but we are very well served with our cybersecurity policies, is what I would say.
Councillor O'Malley, you had a question.
Thank you, Mr. Chair. It's my favourite topic when it comes to risk, which is Three Waters as well, and you brought it up. With our valuation that we've come up with now, would it be fair to say it's relatively conservative in terms of its fairly large valuation when it comes to the renewals and maintenance against that valuation base?
Through you, Chair, Councillor O'Malley, I'm not sure that I would use the word conservative. It's calculated on what is referred to as a depreciated replacement cost. So it's not today's cost of replacing all of your Three Water assets. So it starts off with that, but then depreciates it down based on the age of the pipes. I would use the term that the valuation is arrived at using best practice, the sort of the general wisdom in the sector today. It's a approach that's used by most councils, and it delivers up a value which is higher than what it was under the previous approach, but much lower than what the full replacement cost would be.
Which I guess is my follow-up question, which is Water Industry Commission of Scotland's valuations for all of these waters, Three Waters assets. Has there been any comparison done between that number and the numbers that councils are coming up with in general, and specifically in Dunedin? Has that number been compared?
Perhaps through you, Chair, others are better placed to answer that. But certainly, and Audit New Zealand, who do the audits of the majority of local councils, did say to us this morning that we now have an approach to valuations that is quite consistent amongst the sector in New Zealand. I'm not sure whether any comparisons have been done offshore.
Excuse me, Chief Executive Graham, do you know if comparisons have been done with Scottish Water, or is there anyone here that can?
To clarify, it's not Scottish Water, it's Water Industry Commission of Scotland generated for DIA replacement and asset valuations.
So to answer the question, no, it hasn't, but it has been compared with other councils. So it has been through a council-to-council comparison.
You're happy with the answers? Just to give you some idea of figures regarding Three Waters valuation, it's been suggested that the actual replacement cost of our Three Waters is something like 4.3 billion, which is far more than its actual current state of worth, which I understand is 1.6 billion. Is that where we're sitting currently?
Maybe through the chair, just you'll recall as we presented the finance reports during the year that we were quoting a figure of 2.3 million. Okay, so following the peer review, and to be fair to the valuer, they were basing the valuation on a very conservative, what is the impact of the ground conditions that sit below the pipes. So following the peer review, which was done by an engineering firm, WSP, they have moderated the valuation, so it has come back from 2.3 to 1.6. So effectively the replacement cost has come down from 6.5 to 4.5. And basically that's to do with the terrain factor, which I think we've discussed in various forums. So the 1.6 is the depreciable replacement cost. In terms of the depreciation number that comes off that 1.6 is very close to the number that we're currently reporting in the financial statements. I, as part of my review of the original valuation, identified a group of assets that needed to have their depreciation lowered. So the figure that we're currently reporting will probably be slightly on the high side, but will be relatively close to what the actual depreciation figure is. And that's the number that drives the replacement program potentially.
Councillor O'Malley.
Yeah, and that's really where I was heading. So from the Audit and Risk Committee's perspective, are you relatively comfortable with the depreciation number that we're coming up with now? And just, Mr. Logie, that's what's contributing to the unbalanced budget for this year, right? Yeah. So two questions. Well, you answered that one. So are you relatively comfortable?
Well, the depreciation number is just a calculation based off that new valuation. So, we're certainly comfortable that the depreciation levels or the depreciation percentages are appropriate for Three Water infrastructure, and the number is what the number is. It's just a mathematical calculation. So,
any further questions? As you can tell, we've been having some very interesting discussions at Audit and Risk. I have a question for Mr. Warren, and that is that we have 5 elected representatives on the Audit and Risk, and we're there all the time. Are other councillors welcome to attend on a non-voting basis, and if so, can they speak or ask questions?
So I'll answer that because it's a standing orders question. So all councillors get the papers. All councillors are free to attend. It's with the leave of the chair where the non-voting councillors are able to speak and ask questions.
Great. Well, thank you for clarifying that. I hope that Mr. Warren's subcommittee update has instilled a wee bit of interest in some other councillors to perhaps attend as well. But in the absence of any further questions, I would like to move from the chair that we note the Audit and Risk Subcommittee update. Seconded Councillor Walker. All those in favour? Against? Carried. Thank you very much for that, and thank you very much, Mr. Warren. Looking forward to seeing you again. Sorry. Pardon me.
it's a common issue when you have both first and surnames can be either or. So I answer to either. So
thank you, Warren, and nice to see you, Mr. Allen. Moving on to the next agenda item, number 7 on page 24, financial result for the period ending 28th of February. Is Chief Executive Graham or Mr. Logie interested in making some comments first?
Yeah, just through the chair. As I alluded to, the valuation for the Three Waters assets will drop, so these have the original valuation in them, so when we get the March report we'll adjust that down to the new level, and obviously we will review the depreciation In terms of the overall, obviously our CapEx is still tracking ahead of budget, although the percentage year to date has dropped a little bit, so we're down to I think 109% of the full year of the year to date budget. Probably just to flag to the committee that there is a chance that we may need to increase our borrowing limit to facilitate the delivery of the capital program this year. So what we intend to do is once we've completed the March reporting, we'll do a forecast through to the end of the year, and if needed, we'll come back to council with paper to discuss that and potentially get the delegation increase should we need to do so.
I'll just add to that. We've signalled for quite some time that the level of capital spend was racing ahead, and we were looking to, at various levers, we had to potentially slow it down slightly. We've not been as successful at that as we might have thought, which is both a good thing and a bad thing, because nearly all of the capital works are happening in the Three Waters and the transport space, so it's work that is needed doing. But I will exceed my delegation potentially, and we'll know better in March whether or what that looks like, and so we will bring a paper to council for you to consider around that. We have put in place measures for the next financial year. We've had a bit more lead in time to that, which means that program should be closer to what we think the budget will be, but we've just got a discrepancy this year.
And maybe just add to that, given that our financiers are in the room, we obviously also have to approach them to get our facility limit increased.
Question from Councillor Walker.
Yeah, just a question of clarification on what's just been talked about. We're not talking here about the 250% limit. No, which is circa 113 at the moment. That would be.
Yeah, at the moment, we had the budget was 195, give or take.
189, but that included 6 million saving and things. So it's a chance we'll be looking for a $20 to $30 million increase in the limit if we think that's going to be needed.
Deputy Mayor Barker.
Thank you, Chair. I have a question on page 34 around the on and off street parking revenue, which is unfavourable, $776,000, about the impacting by changing habits with people continuing to work from home. And I guess this might be for the Chief Executive around possibly the economic development. Have we considered looking at how people's habits are changing and the effect that's having on some of our income and I guess our inner city businesses as well?
I think some of those changed assumptions will form part of the 10-year plan with the significant forecasting assumptions. I think this is one area, the change in work habits, that we need to build into our assumptions as we build the 10-year plan.
So do we have any statistics on those? Like, do we have any statistics from our own staff at the DCC?
As part of the 10-year plan, we're working to build those, but the assumptions come a little bit further on in the process, but it's certainly something we're looking at.
A question from the Chair. If we look at the graphs on page 27, in particular the year-to-date operating surplus, it's been plunging fairly dramatically now, looking down to 35 million below. Is this really what the 20 to 30 million increase in borrowing is going to help address, or is this a separate issue altogether?
This is the reported increase in depreciation, which is a non-cash cost.
Right, so it's a non-cash cost, but it's still a situation which is going fairly deeply red. Is it continue? Do you expect it to continue to go deeply red?
Yes, and that has been flagged when we did the annual plan for the draft annual plan for 23-24. Probably just to reassure the committee, I mean, obviously if you go to the next graph, which is your operating cash flow, and it's tracking in line or actually ahead of budget, which is why we're starting to focus more on cash rather than non-cash.
And thank you very much for that. The FIS being able to focus on actual cash is, I think, helpful, although we want to keep sight of the fact that we have major depreciation increases that we're going to have to address in the future as well. Councillor O'Malley, you had a question.
Oh, it's just a clarification follow-up question, and that is that we have deferred it this year because of the uncertainty of Three Waters reform. We would presumably be asked in the next, and which will be the long-term plan, if Three Waters reform was to leave the assets with us, then we'd have to address this deficit at that point. Correct.
Right. In the absence of any further questions, I'll move from the chair that we note the financial performance for the period ended 28 February 2023 and the financial position as at that date. I have a seconder. We have Councillor Wiley. All those in favour? All those against? Carried. Thank you very much. Moving on now to item 8. Dunedin City Holdings Limited, and if I could invite Gemma and Keith, Mr. Cooper and Ms. Adams to come to the table, and hopefully you will treat us with some opening remarks on this fairly weighty document.
Kia ora, and thank you for the opportunity to address you again. The quarterly report and the half-year reports are obviously looking, one's at the quarter period, but the half-year reports embraces that quarter period, so the comments will sort of merge, but I'll deal with the quarterly report in isolation. So in summation there's an improved profitability over last year of $3.5 million, which is pleasing. We're also reporting an improved operating cash flow, which is also positive. On the flip side, some challenges still exist within one company in particular. Delta still is struggling with and attempting to mitigate increased costs, operating costs that is, and how they recharge them to various fixed term contracts, and also the challenges around COVID affecting staff absenteeism and how they backfill, continuing to do the work with subcontractors. So that is a challenge for them, and that will be reflected in their, is reflected in the half year result and certainly in the full year. Of note, other activities there, City Forest has entered into a conditional contract for a further farm acquisition. That proposal's coming before the DCHL board for evaluation next week. At this stage, we would anticipate having a number of issues with that, but in due course that will either come to you as council for approval as it's required over the threshold. And finally, DCTL, again, good to report that we're compliant with Treasury policy, and there's nothing untoward happening within Treasury.
Thank you very much. Questions? We have questions from Deputy Mayor Barker.
Thank you, Chair. I'm just looking at the graph on page, oh my gosh, what page is it of ours? Page 5 of the report, page 46, on the DCH group term debt over total assets, and I'm not quite sure if I'm confused or not. We have the DCHL group total assets at actual 2022, and it sits under the $1.5 million bar. But we have $1.7 billion worth of assets. So is that an error, or am I misreading the graph?
Sorry, where's the 1.7 billion asset figure coming from?
It's coming from the annual report, the 2022 annual report, and also the financial position on page 69 of item 9.
We'll, through the chair, we'll just seek to clarify that ourselves and give you a response.
Right, do we have any other questions? Councillor Gary.
Thank you, Mr. Chair, and I'm sure I'll have more questions, but the one I have at the moment is following up your comments around Delta and the effects of COVID. I wondered why, you may not be able to answer this, why has Delta been so susceptible to this when we haven't heard that of other of our council-controlled companies? What is the different factor there? And I also noticed the very high staff turnover and wondered if you could expand on that.
I haven't got anything official from the company, but given their type of operation, their number of employees, I would suggest that given they're out in the community a lot, mixing and mingling with people, they're probably just more susceptible to the exposure of picking it up. And then when they come back into their head office, it can be shared.
And on the staff turnover, did you have any comments to make on that?
We'll ask the question when we report back in the next session we have with council. Again, I think they are our largest employer, and they've probably got quite a broad demographic, and those people that they do employ are probably well sought after across the community just because of the shortage of labour.
So the current recruitment market, job market. Thank you.
Mayor Raddick, you have a question.
Yes, I'm just curious about city forests because returns have been pretty good of recent years, but obviously softening in the Chinese market just currently. What are their expectations for that market? In the coming year or 2 or 5?
Certainly the market's significantly overstocked at present, and there's been a slowdown for a variety of reasons. Originally it was identified as due to COVID. There was a slowdown in construction. To the best of their knowledge, they're picking that will work through, and it is cyclical. It's a commodity market, and that will improve. The question is, when will it improve? So they have been adjusting their cutting volumes to suit market requirements, so they're not part of the problem. But it's a case of it is very much a commodity, and we're having to take the commodity price at present.
Do they have any diversification of markets or product initiatives in place? Because I see, Korea looks as to be their second biggest, and thereafter it's the domestic market. Do they have any other export markets that they're, investigating or marketing into, or doing any research on? And do they have any other product production ideas?
As part of the process we've embarked on with them to review their dividend policy and dividend levels in line with our letter of expectation from council, they are currently working on reviewing their business model and identifying, particularly around diversification of markets, would that assist their business in a broader concept, not just to take reliance off those, particularly the Chinese market. So we anticipate reporting back to the outcome of that in around about 6 weeks.
Councillor Walker.
Thank you, Mr. Chair, and thank you, Mr. Cooper and Ms. Adams. My question, I don't want to be picking on Delta, but I will. In terms, my question is, and I can't find the figures here, but off the top of my head, I think it's roughly turnover 58 and I think profit 1 or something like that. Is that, and correct me if I'm wrong, is that generally within the infrastructure services business reckoned to be the sort of quantum one would be looking at, even in constrained times that we have now, because it's fantastically slim?
It's overly slim, and it's somewhat masked by revenues also from the Oldhurst settlements as well. We do have 2 directors on that board that are involved in other such companies, and not necessarily focusing on the figures, but it is commonly accepted that those service type companies have a number of challenges at the moment for the very same reasons as Delta. So I sum that up, it's sort of symptomatic, we understand symptomatic across the sector at present. Not necessarily across the board, well, I can't speak for other companies, but it's not a Delta only phenomenon.
Councillor Houlihan.
Thank you, Chair. Can I just clarify what you answered before to the question the Mayor asked? Whether I understood this correctly or not, are you saying that City Forests will look at diversifying to other markets given the geopolitical environment of one of the main countries that they export to. Is that what you were saying?
Yes.
Most councillor questions done. I've got a couple of my own. If we go to page 217 of our agenda, where it talks about the new capital restructure of city forests.
Mr. Chair, is this item 8, or are you moving into item 9?
I've skipped ahead to item 10. Thank you very much for curbing my enthusiasm. Are there any further questions regarding item 8 from anybody else? I've got a general one, and that is regarding the carbon credits potential for meeting the 2030 target for zero carbon that Council has made basic to your operations. I note that the SOIs later on point out that there has been achievement in terms of getting towards 2030, but there are caveats, and one of them with our biggest company, Aurora, is that the target may be reached excluding line losses. My understanding that line losses in Aurora are probably the biggest carbon footprint issue that we have, and that excluding them means that we won't get near the carbon neutrality that we are aiming for in 2030. Can you expand on that, and also the apparent need for other companies to actually buy carbon credits in the event that they simply can't meet the 2030 target because of diesel costs and other things that are outside of their control?
Thank you. It's a big question, so I'll attempt to focus on the various parts of it. So to date, our work with the companies has been on focusing on the challenge, measuring it, reduction, and then finally, how do we mitigate it? So they're the various stages we've been working through, and it's over a number of years. So we're probably at the moment somewhere between the measuring and reduction. We've got the measurement going, and the companies are focusing on how they do reduce their emissions. In the case of Aurora, with their with the leakage in the lines, the first thing is they can't. There's no solution to stopping that happening. It's just a fact of life. It does leak. The question is what they're working at an industry level on is there's a across New Zealand for it, so everyone's got the same measurement component, if you like, whereas our argument, or Aurora's argument, is they're close to the power source, therefore there must be less leakage given we're drawing power from not too far from here, therefore our calculation should be less. So that's one piece of work that they're working on at an industry level. We've also got the point that in the fullness of time we've got to ascertain are we looking at scope 3 being in or out, and that's something that's probably a little unknown yet, and we've got to seek clarity on. Just to put some
Sorry, can you just explain scope 3?
Scope 1 and 2 directly within our control. Scope 3 is things like in the case of city forests, the ships that take the logs to market, they're currently categorised as scope 3. So it's providers of services to you which incur emissions.
Right.
So there's a lot of water to go into the bridge yet. We have attempted to quantify based on our current measurement levels of scope 1 or 2. If we had to mitigate it by buying credits, the cost to the group, which is the DCHL group, would be circa 750,000.
So this is 750,000 for Aurora only?
No, for the total group at today's carbon credit pricing.
Right. That carbon credit pricing, is it expected to go up or down?
It's gone down due to central government's recent announcements of not adopting the Commissioner's recommendations. So it's come off a high of around 75 down to 66. But equally, if you say everyone's chasing carbon zero by 2030, demand's also likely to increase, which should impact on price.
Right. So some time ago, when I've asked whether or not the carbon credits issue was, or the target of 2030 had a material cost for us, you seem to indicate that it was fairly easily managed. Are you still of that view, or is it becoming perhaps obvious that there's going to be some cost in actually trying to maintain a 2030 zero carbon footprint, especially if you want to include things like line losses and scope 3 diesel costs?
It's a bit of a moving feast. I think we're probably just pulling figures out of thin air at this point based on, we've got no foresight on what the carbon credit price is going to be in the future. Equally, we're focusing on mitigating our emissions and reducing them, which again is another moving part. So my sense here is that scope 1 and 2 at today's prices at 750,000. If you said the carbon credit price doubled, that gives you 1.5 million. At the same time, we're focusing on reducing emissions. So it depends what your materiality threshold is, what's a large figure. The work we've done to date suggests that the figures are manageable.
Great. All right, thank you very much. Any other questions? If not, I move from the Chair that we note the Dunedin City Holdings Limited quarterly update for the period ended 31 December 2022. Do we have a seconder? Councillor Mayhem. All those in favour? Against? None. Motion carried. Thank you very much. On to item 9.
Okay, given the quarterly report rolls into the half-year reports, I won't double up. I would just note that these half-year reports are indicative. They cover, given that we have half a year in winter down here and half a year out of winter, so they reflect the first half of the year, which has got slightly less winter periods in, if you like. So we would present them to you on the basis of things seem to be tracking well in line with budgets, with the exception of Delta. That is treated as a progress report, and where everything looks like it's tracking well with that qualification.
Excuse me, if you could just hold for a moment while I just take some advice. Thank you for bearing with me. My apologies, I had misunderstood the running sheet. We are on item 9 at the moment. And are there any questions? Councillor Wiley.
Thank you, through the chair. Mr. Cooper, on page 123, we're looking at the Delta Utility Services Limited Directors Report. In the second to last paragraph, Delta received 1.844 million in surplus and sale proceeds from the Yoldhurst developments during the period. Can you please provide, is that the final payment, or what is the summary around the Yoldhurst payments?
Okay, the original debt interest has now been extinguished, partially by that payment and partially by that payment. There's still further funds to come, which have been unquantified yet, but they'll be the additional over and above the original debt proceeds, which we get a share in. So that's something for the future and is yet to be quantified.
Sorry, Deputy Mayor Barker and then the Mayor.
Thank you, Chair. I have 3 questions. First one, is the airport statement of service performance available? It's not in their report. Is it usual for them to have it in their 6-month report or not?
They have a slightly different reporting requirement as an associate company, so they've got their statement of intent sets out different things, and they don't typically, I don't think they have a statement of service performance on their half-year report, which differs a little bit from the rest of the group companies, but we can provide an update on how they're tracking. In the quarterly update, we had a line that talked about where they're going on at a very broad brush level on the performance measures, but we can provide additional information if you like.
Thank you. My next question is on page 177, and it was just around Dunedin Railways, and I see they've got quite a lot of cash on the books, $900,000, and I'm assuming that was Dunedin DCHL putting in 1.2 million. Would that be at the start of their trading period?
We do quarterly equity injections to fund those, and they tended to, we would sort of put them in a bit in advance, but it's unlikely that we missed the 3rd quarterly equity injection because it just wasn't needed, and we're unlikely to need the 4th either, so it's really a matter of timing.
Thank you. I was curious because I saw there was $11,000 worth of interest earned, and I wonder if it's in the best bank at the railways, or rather within the parent company. My next question is just around the Stella Aurora staff satisfaction result of 93.9%. So, is there any conversations between Aurora and Delta about staff satisfaction and working on that?
Between Aurora and Delta, do you mean in terms
sorry that Delta have such a high staff turnover, and Aurora obviously have a very happy staff, and I just wondered if there's any cross.
Despite working in the same sector, they're probably working in the companies probably have quite different industry profiles, because you've got Delta's got the green space and metering operations as well as what they do on Aurora's network. But I probably make the comment that we're just doing a bit of work at the moment on wellbeing and staff engagement right across the group, with a view to companies sharing resources and experience with each other. So there is some sharing of that nature happening.
If I could just add, our executive team are also meeting with the company executives just to see where we can share information and sort of work with each other on these kind of things.
Mayor Raddick, you had a question?
Yeah, I'm a bit worried about Delta, and to my reading of the balance sheet suggests that we had this, very large, what's called a profit 1.8 million from Yoldhurst as a sale, and then we subsequently paid tax on the net profit of 1.6. That money that came back from Yoldhurst, how is that considered a profit? I mean, I thought that was like a repayment of the debt owed to us, or, you know, the money invested into that subdivision that had been lost and then returned, or had we claimed that earlier as a net loss?
Because the original debt's been recovered, this is now an additional profit which has to go through the balance sheet and therefore is taxable.
So it is actually a genuine profit from that subdivision. That's good.
Ironically, yes. Yes.
Great. Now, but if we take that out of the equation, the operating situation for Delta is a net loss of about 600,000, just from their actual operations. So what do they have in the way of a plan to restore the actual operations of Delta back to profitability?
That's currently being worked on. They've got some external resources assisting them in some internal work on their recharging model. They're also working on renegotiating various contracts that didn't necessarily have renegotiation provisions within the contracts, and we've also charged the chair with looking at other options to improve the profitability. So that's some work that we've been working on now for the last 3 to 4 months, and we see that coming to a head within the next 6 weeks.
And, what is their level of optimism for achieving?
They've got some core underlying issues. The cost of fuel has been a significant increase for them, and as much as there's been price escalations within contracts, it hasn't always been adequate. So that is a challenge. And then the other part of the biggest problem was the absenteeism due to COVID, and that's something that's not easily remedied. So some of this will be timing, but also some of it may well need to be addressed by other reviews of their business. You can be rest assured it's got our full attention.
Just a question from the chair for a mo. The issue of Yildhurst and the dividends that we've just had, the 1.8 million, I understand there still is another dividend profit anticipated from that particular historical business available for next year.
There's a little bit more expected in the current financial year.
Right, but then that's the end of it?
It's probably getting towards the end, but the actual final point's not clear yet.
Okay, thank you. Councillor Lucas?
Thank you. Just 2 questions. One's just a simple one on page 94, and I just think it's possibly an error in the enabling decarbonisation in the statement of service performance. I guess it's the full year target is to 30 June, not 31 March for those first 2.
So what was the performance measure you were talking about?
Under
On safety and safety measures? No, it's 31 March. That's the regulatory year that Aurora reports its network reliability measures on.
Okay, thank you. And the other question is in relation to city forests, and I'm just trying to understand the principle, where they're coming from and repaying the $10 million capital distribution back to DCHL.
That was a bit of work we started a year or so ago, where we looked across the group at the capital structure of all the companies. In the case of City Forests, it had an equity ratio of circa 75% at the time. We sought some external advice and benchmarked them against their industry peers, and that sort of gave you the impression that they were overcapitalised, if you like, or had a lazy balance sheet. So we agreed with them that for the next 2 years they would make a share buyback to us of 10 million per year to get them more aligned with their industry peers and slightly reduce the lazy balance sheet factor.
Thank you very much for all that. I intend to move from the chair that we note the Dunedin City Holdings Limited Group Company's interim report for the 6 months to ended 31st December 2022. Do I have a seconder? Right, Councillor Houlihan. Discussion. There are quite a number of weighty issues with our council companies in here. Does anyone want to speak to them, or have you been completely satisfied with the full answers that have been given from our experts? Everybody's happy? Right, I have some questions myself. Sorry, not questions, some comments that I'd like to make. One of them is that a lot of the issues that have been discussed, and I'm pleased to say that the questions have been fully answered here, but a lot of the issues that have been discussed with our companies, in particular today Delta, have been fairly long-standing ones. And I'm very pleased that we now have in these reports and in our SOIs a lot more detail and a lot better understanding of what is going on with our companies, because my view is that in previous years the oversight of companies by council has not been what it could be. Given that we have a situation now where the companies have essentially agreed to give us an $11 million dividend in addition to the 5.9 interest payment that they have usually given us, I'm very pleased that that's able to be accommodated. I'm a little concerned that it's being accommodated, it would appear, by extra debt and restructuring of, in particular, City Forests' capital structure. So I do appreciate that we are getting more detailed information now. A lot of this information is difficult, I think, for all of us, certainly for me, to be able to really understand at a level where I can make some useful comments or even questions regarding the companies, because they are complex entities. I am reminded of not that many years ago, a particular city councillor, actually I might as well name him, it was Councillor Michael Guest, who said that it simply wasn't possible to get more than 100% of anything, because once you'd got up to 99% you couldn't get any more. So even the basic understanding of percentages is not something that is universally appreciated, and the understanding of dividends, subvention payments, returns on investment, and all of those things, I hope that by reading a lot of this information we will all be able to improve our understanding of these things and be in a position then to make better decisions regarding what kind of SOIs and what kind of expectations we have of our companies. Thank you very much for coming and presenting to us. I now move that we, I've already moved it, sorry, I've spoken to it. Does anybody else have anything they wish to say? Okay, all those in favour, say aye. Against, no. I declare the motion carried. On to item 10, the draft 23-24 Statements of Intent, Dunedin City Holdings, page 212 of the agenda. Mr. Logie, you have some comment to make?
Yeah, just with the leave of the chair, I'll just provide an update to Councillor Walker's question on the Waipori Fund. So no direct holdings in the banks concerned. It doesn't mean that we don't have an indirect holding via some trust, but Mr. Davey is of the opinion that any exposure is relatively low. So that saves an email. In terms of the SIO process from our end, obviously we'll have the discussion today around and questions to the DCHL staff. Following that, we're at it's your decision as to whether you just want to provide email feedback or whether you want to hold a workshop where we can discuss what feedback you wish to provide. What will that end up doing is that then a report will come to the council meeting on the 27th with the feedback that we wish to provide, which you then get the opportunity to discuss in public and approve, and then that will be fed through to DCHL by the 1st of May. If councillors are interested, we have done what we call a PDF comparison between this year's SOI and last year's. So if council are happy to receive 10 files, then you are welcome to go through those at your leisure. I mean, obviously what it will do is it will pick up changing 2022 to 23, but it will also highlight any other changes that you may wish to look at. So if council are happy, then I'll email those out tomorrow. Other than that, happy to take questions unless you want to preface anything.
I'll just make a couple of remarks, if that's okay.
Sure, please.
So again, I've stressed this in the past, that the process we have here from a timing perspective is that the current SOIs before you still contain previous data from the companies pending their final budgets, which come through any time from now through to April. So the final, when you get to see the final SOIs in June, I think it is, that will have their current, the next year's budgeted figures. So hence this TBCs or figures that don't necessarily line up with what you would expect. So this has gone through 2 iterations with DCHL. This is the first sharing we've had with DCC, and as Gavin outlined, there's a process to follow in terms of feedback from there. Our main focus working with the companies on their SOIs has been meeting the letter of expectation from council, obviously. That's involved in some bigger bodies of work, particularly with City Forest and Aurora, as we look forward and work with them on their dividend policies and City Forest, their operating model, how they need to be adjusted to enable us to meet the obligations to DCC under the letter of expectations, principally around dividends. So that work will be embraced in the next iteration that comes to council, and also in terms of if you do have a workshop, we'll be able to respond to the letter of expectations and answer about how we're going to achieve meeting those expectations once we have the bodies of work from the 2 main companies from which the dividends will be derived. So there's a bit of work in progress, and it's a bit of a timing issue at present. That was my opening remarks.
Thanks very much, Keith. Questions? Councillor Walker and then Deputy Mayor Barker.
Thank you, Mr. Chair, and thanks once again. No surprise, my question is around climate change and carbon neutrality. Stitched through a number of the SOIs is mention of refining and implementing the DCHL's waste reduction strategy developed in 2022. So first question is, I assume that's an excellent document. So can we see that? And secondly, it talks about measuring it against 2024 waste reduction targets. Supplementary question. Can we be party to those targets?
In terms of so each company has a carbon emissions reduction strategy and a waste reduction strategy, and they haven't come to council as yet, purely by virtue that we haven't had a workshop forum for those yet, but we can speak to those at the next one, which is in about a fortnight. But their current year statement of intent, this is the first year of implementing them, so they'll be reporting back on those publicly in their annual reports this year, and they've now got the task of updating those and refining them after their first year and updating the targets for next year. And so can you just remind me what the second part of your question was?
Not sure if you've actually answered the first part. So is it yes or no that we can be party to the waste reduction strategies of each of the company that has one?
Yes, they exist already, but we can present on them and take any feedback.
The second part of the question was, it talks in all of them about measuring them against the 2024 targets. Again, could we be made cognizant of what those targets are?
Yes.
Deputy Mayor Barker.
Thank you, Chair. My first question is just around that Delta are working on a diversity, equity and inclusion strategy. Have all of the CCOs got one of those strategies?
No, not yet.
Would it be possible for the parent company DCHL to do an overall one that then feeds down into all of them? Because otherwise maybe we've got 6 companies all doing the same thing.
What we tend to do when we work with the companies on cross-group strategies is facilitate at a headline position, get the companies together in a room effectively, deliver some facilitation, and then let them hang off some commonalities and adapt it to suit their particular businesses. So versus us just rolling out something that's not one size will necessarily fit all. So we let them develop under the umbrella that we put in place. So quite often what happens is one company will do something, in this case Delta, and we will transpose that or share that with the other companies, similar to what we do in this, we're going to do in the cyber security space as well. So when we see a good idea developing in one place, we share that, and often we get reports back that they're doing something similar, which then they improve based on learnings from the other companies. So we do that in a rather than impose it, we facilitate the structuring of it across the group.
Thank you. My next question's around the airport statement of intent, because there's quite a huge change in their measurements. I think they've gone from 48 to 29 measures, and my concern is that they've turned into things not from numbers into achieve or implement, particularly I guess like Councillor Walker concerned about the waste reduction targets. Previously they had a clear measurement of diversion of waste from landfill. Is it possible to put the numbers back in, or will that be part of our workshopping process to bring that up?
What's evolved over a number of years is that we've tended to, well, from one year to the next, through a variety of reasons, we've often added things in. We have had discussions across the companies, many of them gave us some feedback that it was getting a little unwieldy, and they were probably spending more time focusing on the measures than actually dealing with the specific measures. So we've encouraged them, if they see it's got unwieldy and there was too many measures, take out perhaps the redundant ones, the ones that actually weren't delivering any meaningful purpose or that had been superseded by other measures. So this is the first blush at that, and DVML is a bit similar. They've looked at it and tried to embrace a series of measures which is fit for today, and that's not means to say that there may be other measures you want to see there, and that's fine, and hence you can do that through the workshop process if you want them reinstalled. So it's the company's view on what they see as, and DCHL's oversight of it, what we believe are important measures, but you may have a different view on that.
Yeah, there are a couple of measures. It looks like a couple of financial measures disappeared from the airport one, where they had generate a 5.5% return on shareholders' funds and generate a 40% return on shareholders' capital invested. And I just wondered why those were removed. Was that something that went through the board? It just seemed to have disappeared.
I think it would have just been part of their general rationalisation of the number of performance measures, but they also do have that following section on financial forecasts where they'll have the, and when those are populated, because as Mr Cooper mentioned, they're all kind of rolled forward from last year at this stage, but as those populate, some of those goals and achievements will still be there. If you look at page 296 of your thing, so they might not be in the performance measure section anymore, but they shouldn't have disappeared from the SOI entirely.
That might be one that we might look at. And just, I guess my final kind of question is on page 221, when it's Dunedin Venues Management, they said they were removing a measure relating to commercial partner renewals and removing a residents' opinion survey measure. But when I look at the measures, those are actually in there. Was the intention to remove them, or did they move them around somewhere? Because
if they're in the performance measure section of the statement of intent, then it'll just be an error in the commentary, and it may be reflective of the feedback process that we've already had between DCHL and DVML.
Any further questions? I intend to move from the chair that item 10, we note the draft 2023-24 statements of intent from Dunedin City Holdings and a group of companies, seconded by Councillor Walker. All those in favour say aye. Against? No. Okay, the motion is carried. I believe that that's just about the end of the meeting. I want to thank you very much, Mr Cooper and Ms Adams, for coming along and giving us fulsome answers to often strange questions. There are certainly a lot of them potentially in this paperwork. Thank you very much for the comprehensive paperwork, and thank you all very much for your attendance and your attention today. Thank you. I declare the meeting closed.